The W-2s are out and Americans, well, some, are busy working on their taxes. New questions pop up every year when filing your taxes. So let's get to some of those tax questions and get them answered. Joining me now, Vanessa McElrath. She's a certified financial planner and public accountant with ML&R Wealth Management here in Austin. And welcome, Vanessa. Good morning to you.
Thank you. It's so great to be here.
Yes, thank you for joining us. So let's get to those questions. What special planning should we take into consideration this year when we file for our taxes?
Well, for the last 24 months or so, the IRS has been sending out more money unrelated to tax refunds than ever in the past. And specifically, they're going to be sending mailings regarding to the advanced child tax credit. So if you recall, back in July, the IRS started sending these early payments of that. But this is one where you have to reconcile the credit on your return. So if you made too much, you may have to return it. And if you made too little, you could possibly get more. So keep track of that notice. The other is related to that third round of stimulus payment that was sent out. So again, that's one where you want to keep track of the letter and then reconcile it with your 2021 tax return. Gotcha. You could be getting a larger credit.
Gotcha. Okay. So outside of our W-2s and items from the IRS, what other documents should we be looking for and gathering right about now?
Well, usually right around this time, mid to late February, is when you'll start seeing a trickle in of things like 1099. So if you have investment accounts or bank accounts, mortgage interest, those types of forms will get sent out, K-1s. This is really around the time where they start to get pushed out, if not later in the year. So keep an eye on that. But while you're waiting, it's also a good time to just get a little bit organized and, take note of when you made those property tax payments, any child care receipts, charitable donations, things of that nature, and starting to aggregate all of it.
Yeah, that's a good point. All right. So what else can we do, Vanessa, to reduce our 2021 tax liability? Are there any secrets that you have?
Yeah, we can't go back and change the past, but the IRS does have a few action items that you can still do, even though we're after the end of the calendar year, but can still be reported on your 2021 return. So one is you still have time to make an IRA contribution. And that could possibly be deductible against your income, subject to a few rules. Also, if you're self-employed, you still have time to make a contribution to a SEP IRA or a solo 401k. So those are a couple things to be aware of. The other that's a great tax benefit is if you have a high deductible health insurance plan, you have time to still make a contribution to an HSA account or a health savings account. And that you actually have until the deadline of your tax filing, which this year is April 18th.